Hi, this is Kirk with Forex Strategy Secrets. We're going to be talking about taking exit signals. Now, the big challenge of this is being disciplined to take them when they appear and trusting the indicators. If you do that, you'll be better off and you'll be start making more pips than if you second guess them. Even if you take a loss of 2 or 3 pips and honor a signal and then get back in, that's better than taking a loss and losing 2 or 3 times the amount that after the signal was there. Now we're going to go to the charts and we're going to show you how straightforward exiting a trade can be. I'm on a 1-minute chart right now, but first of all I want to go back to a 15-minute chart. And I had this vertical line there for a reason, so you could see what it looked like on a 1-minute, and we'll go back to that, and now what it looks like on a 15-minute. So right here, when this 15-minute crosses the zero line, then that's the direction that you want to be trading. Go to the 5-minute, and right in here we're going to be talking about this area on a 5-minute. That's where you would have entered on a 5-minute, and now we're going to go to the 1-minute. I'm not going to spend a lot of time on talking about the entries, but maybe where we could have entered, because I know there's some good signals there, and then but we're going to be talking about where to exit, how to manage the trades. I'm going to put a line right in here within 2 or 3 pips of that area. That would be an entry signal. Now, we don't know what's going to happen over here. So all we know is it's on the same side of all 3 moving averages, and so the trend is going up. The 15-minute and the 5 both said that's the direction you should be going. So let's just take this and say we manage this trade on the 1-minute, and then we'll talk about managing on the 5-minute. The exit that I find once you determine that you want to manage on the 1-minute is a male filter is a very good exit signal, and the next one is when the filter crosses below the zero line. So I'll put another line right there. Okay, those are 2 areas that you could possibly consider exiting that trade. Now there are ways to take it to where you would just ride through this and draw down and then continue on up. Okay, right there. Okay, did the 5-minute tell us anything about exiting a trade on that to move up right there? No, it didn't. So the 5-minute did not give you any heads up. And so the 1-minute, if you'd exited there, from here up to about the middle of that, say that's about 27 pips. Pretty nice trade. So that's one of your exit signals. Now let's go to another place where we possibly would be entering a trade. Right here, the 1-minute's across. It's on, everything's on the right side of that 3 moving averages, and that would be a place where you might be consider entering another trade. And these were areas that traders were trading in the Pip Club today. This one, we can take a look at this based on the 1-minute. Now what did we just talk about? Here's a filter color change, but it's not a male filter. The male filter is right there. Seeing that if you'd said that's where you want to consider getting out, then that was another 27 pips. Yeah, so we had 2 27 pip trades, so we're looking at about 54 pips if you take an individual trades right there. Now let's look at the second one on a 5-minute exit. Maybe it would be 5-minute would not be necessarily a good place to manage it. Okay, right here, the 5-minute said the filter changed colors, but notice that the male hasn't changed colors. So I'm going to put another line here where the 5-minute said male filter, and the other one would be where the filter on the 5-minute went below the zero line. So right in this area there were some exit signals. Now let's go back to that 1-minute. See, the 5-minute says over here, the 1-minute said possibly right there. We're within 2 or 3 pips of exiting the trade because the market was going sideways, so you could have taken that trade right there and been okay. Now, the exit signals are pretty straightforward. The challenge is determining which time frame you want to choose to manage that trade on. And we've shown you over here at the beginning, the 5-minute didn't give us a male filter. It just said it's slowing down a little bit. Now, I'm going to mark this area with a box right there. And I'm going to go to the 15 minute. What did the 15 minute do? The 15 minute had the buy signal on all three indicators. So what that's telling me on this 5 minute is it was just doing a corrective move. Now we'll go back and look up at the 1 minute. See, that is a corrective move. Well, do you necessarily want to stay in on that one? You decide. You may not want to trade counter trend, but trade in the direction of that trend. You'd had 50 pips. Now let's just mark it and say that you had traded 41 on that one. It came back against you and back up, and did 27. Now you're at 68 pips versus 54 if you had ridden through that dip there. That doesn't mean you can't add on heavy on this second move up. So what have we covered? As exit signals on 1 minute, exit signals on 5 minutes. I want to take a look at what does it look like right over here. So you had entered another trade. Right, here's the best entry. Now you can see how it really did move on that 15 minute. The 5 minute, it said that's a good place to enter, someplace right in that area. The 1 minute said to enter someplace here. Now, so what we're looking for is where are we going to get out of this trade? Can anyone see where you might consider, if you're managing on the 1 minute? Mayo filter right here, and there was a nice little move right there. Now let's go to the 5 minute on the same exact move and see what the 5 minute looked like. 5 minute, there was no Mayo filter until right here. So you can see on the waiting for that Mayo filter to take place. You may have lost about 8 pips. Now, here's the other thing. When the 1 minute crosses below the 0 line, if you'd exited there, you're still right up in the same place that the Mayo filter suggested you might want to get out. So I'm going to put a line there, and there's 3 lines right here, and go over the 5 minute. See, all the 5 minute did is just change colors. That's a heads up. It doesn't mean to get out, but you need to develop the art of knowing when to use the 5 and the 1 minute. So the possibility is you could have made 19, 20 pips versus maybe, let's round it to 30 pips. So there's a little bit of difference in the pips there. Now, I've talked about these smaller time frames. Let's take the same concept. I'm going to use the 1 hour and the 15 minute. So I'm going to get rid of all these lines. Okay, does anyone have any questions? Type them in or raise your hand, and I will open your mic if you have a question you want to ask. Have you had any questions come up while we were, did you say only enter on the 4 bar?
Yes.
The one rule that you can bypass the 4 bar easily without worrying about it is if everything is on the same side of those 3 moving averages. Right here, there's an early bird filter, and that is the best entry in that particular point. 4 bar, you may have lost 2 or 3 pips, so either one, right in that area, 4 bar or early bird filter, if it's in the correct side.
You will only have missed that difference. So there's not a lot of difference that takes place in those, but usually it gives you a chance to get set up and see it happening. Ken points out that the counter trend is a bit different on the exit.
Now the counter trend, sometimes it's better to exit based on the entry time frame. If you're doing a counter trend on the 1 hour 15, you probably want to enter on the 15 or even go to the 5 to exit on it. If you're trading 15.51, you may want to enter and exit on the 1 minute signal.
Mark asked a really good question regarding the different time frames and waiting for a fresh pullback or filter or a fresh color cross or color change. Basically, what you're going to look for is if you see a fresh cross on any time frame, you want to make sure that what you're seeing on a lower time frame or a higher time frame confirms. So if it's a lower time frame, you're seeing the first cross, you want to make sure that the color's the right color and or the right side of the zero lines on the larger time frame, at least the right color. But when you go from a larger time frame with a fresh color to a lower time frame, if it's not fresh on the lower time frame, you want to wait for a fresh confirmation in that same direction. So it's all about patience. Today, for example, I took some trades that I had to wait quite a while for the exit to take place. But when we're dealing with the entry was fresh on 2 of the time frames, and I had to wait for the entry on the 3rd to make sure that I got what I was looking for. So it's just a matter of waiting. If you're going to use a midterm time frame or a midterm scan, you want to make sure that you're looking for midterm signals. If you're looking for lower time frames or quicker entries and exits, then you're going to use the lower time frame signals, and vice versa when you're dealing with the larger time frames too. So yeah, you definitely have to determine what you're looking for, hone in on it, and focus. You can only swing one hammer at a time effectively, so pick one hammer up and use it. Don't try to swing all of them at the same time. Yeah, market. The key word here is fresh. If it's fresh on both time frames, you can enter on it. If it's not, then you need to wait for the fresh. Kirk, mark a fresh signal on that chart right where you were looking at earlier.
For which time? What are you doing? Buying or selling?
Right. For a buy, just for a buy, for example. Mail filter. Okay, now mark the 4 bar. So mark them both. So you see them one.
That's an early bird filter. That's an early bird filter.
Okay, now really quick, Kirk, I want you to do something here just to explain my point here. Mark, you put your anchor on that first set of vertical lines you did to the left. Okay, now that's the 1 minute chart. Now go up to the 5 minute. Okay, now this is static information, but what we're seeing here is you see that first vertical line there shows a 4 bar pattern, fresh filter cross, fresh mail cross on the 5 minute. You drop down to the 1 minute, go back down to the 1 minute, you're going to see that you had 2 minutes worth of fresh opportunity there. That's what I'm saying. You have a little bit of a wiggle room. If it, and I've entered positions on that 3rd black filter color bar or colored bar because it was moving in the right direction. But I know what I'm looking for, and I'm willing to take the exit signals. That's why this particular workshop is valuable in the fact that Kirk's showing you what to look for as far as exits are concerned. So if I got in late and I got the exit signal, I'm going to miss some pips on the front end. But the earlier is better. That's just the whole point. And you're just waiting for it. Now, if you go to that next set of vertical lines Kirk you did, I just want to try to kind of drive this home real quick, and then I'm going to tie it back into close exits. Yeah, move the anchor to those so we're not missing anything. And this time I'm going to have you go to the 15 minute first. So let's say that, okay, that second vertical line there is your 15 minute. That looks a little bit late, doesn't it? If you go down to your 5 minute, it's still early. You go to your 1 minute, and your 1 minute's confirming that the 15 minute is in a zone. So would you be early or late? The answer is both, depending upon what time frame you're looking at. If I'm looking at the 15 and I see an entry on the 1 minute, and go back to the 5 real quick, so I see either of these entry points on the 1 minute, and the 5 minute isn't the right color, but it's on the right side of the Mayo zero line and the filter zero line, I could possibly take that trade knowing that I'm in a weak zone on the 5 minute, but I'm in a, go to the 15 minute, I'm in a strong zone on the 15. So I'm in a trend that I feel comfortable taking that trade. Now going back to the 1 minute to look for the exit at that point, knowing that I'm in a trend or a 15-minute trend or a zone that's going long, I'm going to be cautious in watching for those exit signals to time my exit, like Kirk suggested, or manage my trades accordingly based on the trend. And one of our other workshops in the near future here is going to be on zone trading and trend trading, so you can learn how that all ties in together between the entry that I just described, the exit that Kirk talked about in the session today.
The filter was all buy signals, all above the zero line. The male was all above the zero line. The male was all above the zero line, all headed long. So you go to the 5 minute, notice where the male, AO, and the filter are all on the same side, but the filter changed colors. That's just a little sideways hesitation. If you can slow down long enough and look at these, go find some examples and look at each line individually. Then this is what it looks like on the 1 minute, but the 15, you just said it was a solid momentum.
What it's going to look like, a fresh signal on the 1 minute is going to either be a early bird filter or a 4-bar. On a larger time frame, it's going to be the same thing or a color change. But you're not going to enter on the larger time frame unless it's a 4-bar. If you're entering on a one hour, for example, and that's your lower time frame, then you have to have a 4-bar. But if you're just looking for a directional of the trend, you want a color, and you're entering on a lower time frame with a 4-bar.
So if you'd enter that 1 hour right there, there was a 4-bar.